All right, kind of a solid estimate there of job gains. However, in recent weeks, we've seen a number of layoffs. IBM, just the latest, saying they're going to cut a low single-digit percentage of its workforce, which is going to be thousands of people. Give us a sense. Does this report, in your mind, does this show a blip, or does it show kind of a rebound in what we're seeing? Because so far, it's been a low hire, low fire year.
It is. It has been. Although we have seen in the latest numbers, whether it's ADP, in the weakness in the September employment situation. It will be interesting to see, as the consensus expects, if that actually reverses. The ADP's actually released some weekly data, which suggests that those job losses that we were seeing through September have reversed. That we're starting to see hiring again, and I guess it was kind of through late October that they've estimated 14,000 jobs on average per week being added. So that's where you've got people expecting that if you multiplied that by 4, you'd be looking at a pretty healthy a gain of, let's say, 50 or 60,000. So a positive turn. The ADP themselves have sort of noted that there is a little bit more hiring momentum. But as you said, the layoff announcements from companies have started to pick up. And with not having other data to look at, that is absolutely something that people are watchful of.
Michelle, I want to go back. Everybody says it's kind of a low hire, low fire environment right now. A lot of other people say it. But if you go back to that Challenger data from early in October, year to date, and this is back in October, more than 940,000 job cuts announced, highest year to date since 2020. Since then, we got a number of announcements from UPS, from Amazon. We just hit on IBM. We also heard from Target. What exactly is going on? Do you believe that it's AI? We had one of our colleagues, Steve Leisman, do an outstanding story. Also, Gabrielle Fonrouge and Annie Palmer contributed, just saying that there's some AI washing out there. But is AI really impacting the labor market?
I think a couple things are going on. I do think that firms fundamentally have been concerned about the economic outlook, and I think that led to some pause in hiring over the summer. But then I think more structurally, there is also a concern or unknown about the impact that AI is going to have on the workforce and the needs that employers are going to have for staffing going forward. And I think both of these things have led to more caution on the part of firms when it's come to hiring. Now, the one thing I will say about layoffs is we can see these announcements come, in clumps, and that can raise worries. Although when they actually take effect and they may be drawn out over an extended period of time. And so when we talk about employment statistics, it may not be the case that the layoff numbers actually, are as evident as they look when they're kind of all clumped together. I will say some of the states, we are still able to track initial unemployment claims from states, even though the government isn't reporting. And as yet, we're not really seeing much of an uptick there. So it's unclear at this time what the timing for some of these layoff announcements is going to end up being. But I do think AI is leading to more caution on the part of firms hiring, again, as they try to assess just, again, the impact it will have on their needs.
Yeah. One other factor I've heard a lot of people talk about is inflation. Very quietly, we continue to get these reports about inflation ticking up. Is that something else weighing on the labor market, or do most companies believe what we've kind of heard from the Fed, they believe it's going to be a one-time price shock? Because whether it's ISM, PMI, we continue to hear these reports about input prices going up and also selling prices going up.
Well, there's a couple of things. I do think that we're seeing, continued persistence in the inflation outlook. It certainly isn't coming down as quickly as people thought. It also hasn't risen as much as people thought we might see as a result of the tariffs. I think when we're talking about the labor market, perhaps more relevant is, as the labor market's weakening, what is the impact on wage growth? Because many people believe that is a real core fundamental part of inflation. If workers or consumers don't have the wages to support paying higher prices, it's awful hard for companies to raise prices or sustain higher prices. And so I think one of the benefits, if you would say a benefit, or one of the things I think that the Fed is watchful of and thinking about the inflation outlook is if the employment situation is weakening, that will take some pressure off of wage growth. We are seeing some slowing in the wage numbers, and ultimately it would reduce a risk for the inflation outlook and would
All right, Michelle
suggest
Girard.
you can continue to see fundamentally a deceleration.